A trader's edge is not found in perfection but in repetition. Okay, now what does that mean? It means that there is no actual strategy that works 90% of the time. All right, now what we are trying to say here is find a strategy, okay, and do what? Repeat your actions on that strategy. Keep coming up to the chart, placing one same strategy over and over again. I know it's boring, okay, but for you to know that you're on another level of trading is when you keep doing the boring stuffs, okay. Those boring stuffs shows that yes, you are now a professional trader. Okay, real trading is boring. If you want to trade like a professional trader, trading is boring. Okay, repeating one action over and over again. I always tell you guys, look at trading as a long term. Now I'll be sounding this in your ear more often on this topic because it's about having discipline and consistency. All right, so you will be hearing this more often. Trading is long term. If you want to be looking at short term, then you should be looking at gambling. Trading is never a short term business, it's a long term, just the way we do other business, just like our other businesses. Okay, trading is not a get rich quick scheme. It's something we do over time, consistently, one particular strategy and with discipline. All right, making sure that we follow all our rules with a sound trading psychology. Okay, now this session I'm actually bringing up for us is to improve our trading psychology. Trading is actually a business of what? Consistency. We need to be consistent in doing one particular thing, doing the boring stuff, but the right thing. Okay, pick a strategy and just be consistent on it. Every day you come up to the chart, you see your strategy, see your setup, everything is supposed to be in place, nothing missing, all your confluences supposed to be well met. Always a rules based strategy, always go with a rules based strategy. Make sure that your strategy is rules based and not based on guessing or feelings. Okay, your strategy should be rules based, and also doing it repeatedly over time, over a long period of time. That's what keeps you on the loop, gives you an edge in the market. That is the meaning of that quote there. A trader's edge isn't found in perfection but in repetition. You can write that down on your notes and always go there, so that whenever you want to start trading, you remind yourself that a trader's edge is not found in perfection but in what? Repetition. Now, consistency doesn't mean never losing. Okay, consistency does not mean you are never going to lose. It means always sticking to your process. Like I said, you're always sticking to your strategy, your rules-based strategy, your risk management. Everything supposed to be intact. Your trading psychology, everything supposed to be on point and intact. It is very, very boring, but it's what gives you an edge in the market. Now, when doing that long term, you are going to see improvement and you are going to be profitable. Now, trading is all about how profitable you become. That is why risk management is very important. But we won't be going into risk management for now. Our topic for today is how to build consistency in trading. Okay, but first of all, what is consistency in trading? We now know what consistency is. That is doing something repeatedly. Okay, doing one particular thing repeatedly. That's consistency. So now, what is consistency in trading? Number one, it says showing up daily with the same mindset. That's your trading psychology. The day might be a good day, it might be a bad day. You might not even trade that day. So go with the right mindset. Okay, with the same mindset of you are actually sticking to your rules, whether you lose or you win. you are sticking to your rules, you are not changing anything, you are waiting for all your confluences, you are using same risk management, you are not sizing up your lot size, your psychology make sure is on point. So you are doing that, showing up daily with the same words, with the same mindset. Number two, following a tested strategy without deviation. Now, before actually having a strategy, you say this is the strategy I will be using, you must have done what? Learned that strategy, not only to learn it or watch videos or read PDFs, but actually you have backtested it, optimized it, and also forward test. When I mean optimize, you've checked it on different time frames, know which time frame it works best. You've checked it on different pairs, know which pairs it works best, and also choose a particular pair. Okay, about you can use 3 for a start. Okay, you can start with 3 pairs that you focus on. You can't just enter the market and decide to trade any pair you see. Okay, it's advisable that you pick 3 first, master those 3. Okay, so you know that you are acquainted with the movement of those 3 pairs, the way they move. Okay, the way their price action movement is. So make sure you have a particular set of pair that you are looking out for, not just looking at random pairs. Now, that's that for following a tested strategy without deviation. And make sure that you do not deviate from that strategy. Do not just jump from that strategy to another strategy. Why? Because you're not having the results you are wanting to have. That's why I tell you that trading is looked at long term consistency. You might be having wins, you might be winning the first week, you are on very good wins, then the second week you lost 3 trades, and in the previous week you've already won like 5 trades, but now you just because you lost 3 trades, you say this strategy is not working again. You are jumping from the strategy, going to another strategy to test another strategy. You understand? Now that is not ideal. Trading is long term. Make sure you stay on that strategy, focus on that strategy, forget everything you know about any other strategy. Make sure that all the rules about that strategy, you are following it keenly without any deviation, and you will see how your consistency rate is going to improve. Now, number 3, we have risk the same percentage per trade. I've said this before. Do not size up. Always risk the same percentage. You might want to size up. Maybe you win 5 trades on a row at a stretch. Now you are feeling like Superman. You are feeling invincible. You are feeling like a pro trader. And now a thought, an intuitive thought comes into your head. Say, why not size up? You've been using this particular small risk and you've been earning little. Meanwhile, if you had sized up, you would have earned a massive amount. Why not size up? Now you want to size up. In the process of sizing up, that particular trade you analyzed went wrongly and you've already sized up. That lot size you increased. What did it do? It made your stop loss bigger. Okay, bridging your risk risk management system. Your stop loss will now be bigger, can even wipe out the gains you've already gathered from what? From the previous 5 trades you won. Now that can also lead to what? Over trading. It can also lead to revenge trading. Now the market has given you profit. Let's assume you've been what you got from the 5 trades was $10 each, which was $50. Now you sized up. When you sized up, the market hits your stop loss, making you to lose $50. All right. Now after losing that $50, you want to come back at the market, making revenge trades. Now you won't be trading with a sound mind anymore. You will be actually trading just to do what? Get back at the market and collect the $50 they collected from you. Okay, now in the process of revenge trading, you want to over trade, not minding your limit. You understand? your daily loss limit. Let's assume you now lost $30 extra. You still want to get back at the market, make to overtrade. Normally, if you lost $30, you are supposed to go out of the market. But now you are losing $30 and you still want to trade, you are still trading, you are still placing more trade. So it brings out over trading. So make sure you are risking the same percentage per trade. Every trade you make, you are risking the same percentage. You are not sizing up. Okay, now what we have in number 4 is journaling, reviewing and improving. Now make sure that all your trades are being journaled. Like I said, the boring stuff, when you start doing the boring stuff, you go to the next level of trading. You see that your trading becomes easier, less stressful, and simpler. Okay, and now you are going to see profitability long term. You are going to see long term profitability. So journaling your trades is very important. While journaling your trade, you are reviewing them. Okay, after journaling your trade, you review them. Maybe after the week, you review them, see how your strategy worked out or how your trade for that week went, your consistency level. So that helps you improve. When you are going back to review your strategy, it helps you improve. Now if your strategy is giving you 60% of the time wins, and you have actually been following your risk management keenly, not sizing up, you see that you are profitable. Even if it's a 50% win rate your strategy gave you for that week, you are still going to be profitable. Even if it's down to a 30% win rate, you are still going to be profitable, but just with a little profit, but still yet you are profitable. I always tell my students that 0 is better than -1. Okay, 0 is better than -1. If you find yourself at break even, congratulations, you are also doing it rightly. You are also doing the boring stuff and also on the next level. You understand? Some weeks you might go back to break even, not profiting anything. Some weeks you might not even trade at all because you did not see your setup, and it's fine. It's 100% okay. Now when doing this thing, you are improving. So that our number 4 is what? Journaling, reviewing and improving. Those 3 core things is what you should also do while trading. Now number 5, avoiding emotional trades. No over leveraging, no revenge trade, no over trading. I've explained this before while explaining the risk, the same percentage per trade. Okay, so now what I told you previously is also how to build consistency in trading. That is by showing up daily with the same mindset, following a tested strategy without deviation, risking the same percentage per trade, journaling, reviewing and improving, avoiding emotional trades. That is how we build consistency in trading.